Hello guys, welcome to our video. In today's discussion, we will simply introduce borrowing cost and discuss the way of calculating it. Okay, today we will be presenting one LKS 23, which deals with borrowing cost, a key area in financial reporting that ensures the accurate and consistent treatment of cost incurred when borrowing funds for qualified assets. This standards aligns closely with international practices under IAS 23 and plays a vital role in presenting a fair view of a company's financial performance and position, especially in capital-intensive industries. Okay, now move to our simple introduction of borrowing cost. The cost of borrowings refers to the total expense incurred by a borrower when taking out a loan. It is not just the interest rate, but encompasses all charges and fees associated with obtaining and repaying borrowed funds. Understanding the cost of borrowing is crucial for individuals and businesses alike when making sound financial decisions. It's based on IAS 23 of the International Financial Reporting Standards issued by the International Accounting Standards Board. Now let's move to how to calculate the borrowing cost.
So guys, now we can check out how to calculate the cost of borrowing according to the LKS 23. So our calculation is ABC PLC borrowed 25 lakhs loan from bank with an interest rate of 12%, which was equal to its effective interest rate on 1st of April 2024 for the construction of power generation facilities of the company. The loan was received on April 1st and utilized 10 lakhs on qualified asset. On April 1st, the company deposited the remaining amount in the bank for interest at 10% per annum. All of the amount is withdrawn and paid to contractor on 31st December 2024. When the construction was completed and ready for use, the company returned the loan to bank on 31st March 2025. Power generation facility was available for use in the business from 1st of April 2025. So that will be our content for the case study. So let's refer the first question. The first question would be calculate the net borrowing cost that should be capitalized as part of the cost of the newspaper and the finance cost that should be reported in the income statement for the year ended 31st March 2025. So let's refer how to calculate the answer for the first question. Okay. So first of all, we should find out the finance cost for the total year. So it would be, we should check out the 12% rate for the total loan we borrowed. So the total loan is 25 lakhs and it should be multiplied over 12%. So then the interest should be, or the finance cost should be 3 lakhs for the total year. But according to the LKS 23, we can only capitalize a part of that finance cost. For that's the as the reason we can say uh, we are only taking the time which the asset was being created. So only they have taken 9 months from the total year to create the asset. According to that, we can only capitalize the finance cost only for 9 months. So the finance cost was 3 lakhs, and only for 9 months we can take 3 lakhs must be multiplied by 9 and divided by 12. So the finance cost that can be capitalized is 2 lakhs and 25,000. Then the remaining cost of 75,000 is a finance expense, deducting amount of the interest earned from the investment. So now we should find out that the company has deposited a fund at the bank as an investment under 10% annum for the year. So that should also only taken for 9 months because for the same reason. So The 15 lakhs has been multiplied from the 10% and then multiplied from the months of 9 and then divided by 12. So the interest earned from the investment is 1,12,500 rupees. After that, now we can find out what is the actual net borrowing cost. So it should be the finance cost that we have capitalized must be minus the interest we have earned from the investment. So it would be 2,25,000 must be minimized by 112,500 rupees. So the net borrowing cost for the total asset is 112,500 rupees. After that, now we can find out the second question. The second question says, show the extracts from income statement for the year ended 31st March 2025 and statement of financial position as at 31st March 2025. Now let's refer how to find out the answer for that. According to that, in the income statement, the finance cost should be 75,000. As the reason for it, the total finance cost was 3 lakhs, and from that 2 lakhs and 25,000 has been capitalized for the asset. So only the remaining amount will be the remaining amount will be transferred to the finance cost. So the remaining amount is 75,000, and thus the total finance cost for the year is 75,000. After that, for the statement of financial position, we should find out the value of the property plant equipment. So it has been calculated as first the loan we have borrowed from the company, and then it should be plus it should be summed by the financial cost that has been capitalized, and it should be deducted by the investment interest earned from the investment. So the total property plant equipment amount will be 26 lakhs and 12,500 rupees. So that's the our calculation for the LKS 23 under that LKS. We have done a particular calculation on this LKS. Thank you everyone for watching our video. Thank you.